Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, October the 14th, 2015, and this is the daily report for gold and silver. We do have a strong rally in the precious metals across the board. All of the precious metals complex, all of the individual metals that compose that complex are trading in percentage points higher. First to gold, trading up currently about 1.5%, about $18. It is trading at 1186. If we take a look at the highs and the lows for the day, you can see the low that it traded to was 63.50, the high 89.83. And currently just about $3 off of that high at 86 and change. So traders, I want to look at the most recent moves that we have seen in the precious metals, specifically gold, in terms of a couple of different studies and different charts. Currently, we are looking at a daily chart, and we clearly see the main point that we really wanted to take out were these highs that were sitting up at around 1171. Just prior to the market selling off from approximately, call it 1200, in which we saw this market drop from 1200 down to 1071. The next rally that actually came into the market, which began, call it 1080, up to 1071, certainly was not a higher high than the previous high. So it put into question whether or not we had any kind of defined or real bottom, as I believe we do have at these lows. And as I talked about not only on the last couple of shows, but if you've had a chance to look at our Outlook 2015, if not, I highly recommend that you do. I truly believe that that was a major cycle low. And from this point, although we're going to have peaks and valleys, we should be slowly moving back up towards a higher pricing. In terms of the forecast that I'm looking at, I'm currently calling about 1230 is really the mark that I believe will hit by the time this year concludes, and 1300 by mid-2016. Of course, with moves like this, we could see an acceleration of that, but we're certainly seeing this market move nicely to the upside. So with this kind of rally, obviously, we need to adjust our different Fibonacci retracement numbers. And at this point, I have just put in one basic fib retracement. That fib retracement is from really the prior high that we got when this market traded to 1231. That's really the mark that I believe we'll take out on this rally. And as I said, this rally will have peaks and valleys. But when we do that, we see a couple of areas that we definitely want to look at. Now, first of all, our former level of resistance, which was roughly at, call it 1170, comes in when we create this fib retracement, which of course is 1231 down to, call it 1072. So we're utilizing this entire range here as the area. Now you can see that this becomes a 38% retracement level. And so what was former resistance, I believe, will now become support. Secondly, and even more importantly, we get a new number that comes in right below 1200 at 1194, and that is our 23% resistance level, and that is probably going to be our current level of resistance, our 23 retracement level, and that is currently going to become what I believe will be resistance in the market, although it could be very minor resistance. We're certainly not there yet, but we will absolutely have to see how this market reacts if it continues to track higher, which I believe that it will, and how it reacts up here at 1194. We currently have a long position that we took on roughly at 1144. I will be recommending that we raise our stops, and at this point, traders, your stops should go in below 1170 on a protective stop, because my sense is this is the area that will now become support. So traders, my recommendation, as I said, raise your stop on our primary long trade, which is gold. Our secondary trade that we have on right now is our palladium trade. Now, whether we want to call it sheer luck or the fact that we avoided a bullet, or having our technical indicators actually give us some valuable information, we avoided being stopped out. We had our stop below 681 on palladium. We're in palladium roughly where the market is trading at, I believe 704. But as you can see, this was yesterday's trading activity and today's trading activity. Market did touch right at around 681. And as I said, there were a couple of primary reasons for putting the stop at that place. First of all, my sense was that if it broke through this lower channel line, this channel line right in here, then it was a long trade that I believe was invalidated. That was the first thing that we were looking at. The second thing that we were looking at was a sheer level of support. We'll go ahead and pull up our daily chart here to look at that. And that was the fact that before this market began to climb up, we did see an area right in here at around 675 that we believed should be a support area, and so we put it a little bit above that point. Traders taking this palladium call, my recommendation is to maintain your current stop in this market. We haven't really moved that far away from our initial position. Maintain our current stop, maintain your current long in palladium. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.